Arvind Mehram, Secretary of Department of Economic Affairs with the Ministry of Finance, joins us from New Delhi. Arvind, good morning. Thank you for joining us. After 9 months, we have finally seen a rate cut. You have been arguing that the central bank to do its bit to revive the growth. Do you think this notional rate cut will revive economic growth?
We welcome the rate cut yesterday. In fact, they have also eased liquidity through the cut in the CRR, which would mean that the banks would have much more liquidity to be able to lend to projects. From the government's point of view, we would always wish it was more, but I also acknowledge that the Reserve Bank of India has concerns about inflation. But if you read the governor's statement carefully, he has also mentioned that inflation is coming down and he expects it to be further moderating through the year. And so we can look forward to some more positive action from the Reserve Bank during the year.
And your government's efforts in the last 4-5 months have changed the mood. There is more optimism for sure, but one hasn't seen investments, break ground. Why are investors holding back, and when will we see that happen?
You must remember that there is always a gap between the change that happens and the perception of the change that has happened. So the decisions that the government has been taken of recent are getting transmitted to the investment climate, and we therefore believe that in the coming months the investors would begin to invest in the economy. These are already being seen now because there are a large number of private corporates who have declared their intention to bring in new investment. They have started looking at new opportunities to invest. Some of the projects that they had put on the back burner are now being dusted out and brought up ahead. So I think you will begin to see in the next 2 to 3 months some good activity on the investment side.
Arvind, do you think with all the decisions taken in the last few days, India has averted a downgrade threat, because concerns still remain on execution and possible fiscal slippage due to elections?
I think we are not very far away from our next budget, which is going to be presented on the 28th of February. Once again, Finance Minister has categorically stated that under no circumstances will he allow fiscal deficit to slip above 5.3% this year and 4.8% next year. And this you would be able to see in the budget numbers itself. So I think in the next 1 month, what the government has been pronouncing would be fully established. And I think this is also something which will further establish the credibility of what the government has been saying. As far as the rating downgrade is concerned, I think it's also overstated, because the decisions that government has taken, for instance, fiscal consolidation is one area which you are seeing. Then on the capital flows also, a large number of decisions have been taken to increase the capital flows into the country. So on both the current account deficit side as well as on fiscal deficit side, the government has taken steps and the results are to be seen. On the capital flows, for instance, in the current month, it has been the largest flow in the last several years in 1 month. So I think there is now a statement of confidence in India by the investors, including the foreign investors. And the real evidence you would be able to see in the next 2 to 3 months.
Mr. Mehram, sentiment may have changed thanks to the many economic decisions, but India is still staring at a decade-low growth. When will we see a turnaround?
So how do you say that that's a decade of low growth? In fact, barring the last 2 years, where it has come down, in the last 6 to 8 years, India has consistently grown at 8% plus, which is not low growth. So I do not believe that India has been witnessing low growth for a long time. In fact, on the contrary, even 5.5% in today's scenario is fairly good growth rate. Although for Indians it is disappointing because they've got used to 8% plus. So it's a matter of perspective, I would say. But I do not believe that the Indian growth rate has been low for the last whole decade. And I also believe that our potential growth rate, which is 8%, we should be able to achieve in the next 2 years or so.
And finally, Arvind, Indian markets have rallied strongly. Indian markets are up already 25% in last 1 year. Now, isn't that ahead of macro realities? Or do you think the capital market recovery is here to stay?
Macro realities are changing. For instance, fiscal deficit is part of the macro reality. And if we are going to bring it down, 5.3%, if we are able to achieve this year, this would be quite commendable under the circumstances, and which we are going to achieve. And 4.8% next year. So we are bringing it down. The consolidation, fiscal consolidation plan has been announced. By 2016-17, we should be down to 3%. Now, this is a very credible plan. I mean, it impacts the macroeconomic parameters of the country. So I don't see that it is purely a virtual market which is driving the recovery. I think virtual market is ahead of the curve because they are able to see farther than what real economy is seeing. But it is based on the promise that the real economy is picking up, and I do believe it will.